Hello, in this presentation we will process payroll within QuickBooks Online. Here we are. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. With the QuickBooks Online dashboard, we will be continuing with the Get Great Guitars problem. We're looking into the processing of payroll at this time. A couple ways we can get into the payroll processing. One is to hit this little plus icon up top that then turns into an X and then go to the employees and payroll. The other, I'm going to click out of here to go to workers over here on the left hand side. So if we select the workers item, we have this item here. If we're in the employees tab, then we'll see our 2 employees. We're just going to be processing payroll for 2 employees. And as we discussed last time, there's a lot of different options for payroll. So when you look into payroll, you really got to decide of what we're trying to get out of the payroll processing. Are we having a really complex payroll that we need to get into and really decide what we want to do with it? Do we have a payroll process that we're trying to decide how to handle the payroll process? Should we do it within QuickBooks? Should we do it outside of QuickBooks? If we do it outside of QuickBooks, how do we then put that information into QuickBooks? And so there's a lot of different options if we are going to do this in QuickBooks, as we discussed in a prior presentation. There's a couple different options to do that. And if you are to do it outside of QuickBooks, then we still need to process that information and enter that information into QuickBooks. What we want to do here is to get a general idea of the options that are there, and then to process 2 checks just to see what the payroll entails and why it's more complicated than just what a normal journal entry typically would be. So if we were to set up the payroll, we have these 2 employees, but we haven't set up the payroll process within QuickBooks. We can go to the Get Started here, and that would go through the payroll options. We won't take a look at all the different options within QuickBooks, but you can take a look at that. And then you need to consider also, of course, whether or not you want to process payroll outside of QuickBooks or have a third party, such as ADP or Paychex, processing the payroll, or possibly a CPA firm. And if that's the case, you still need to put that information into QuickBooks. And that's what we're going to basically do here. We're going to process payroll. We're going to process these 2 checks and look at the payroll calculation as if it was done by a CPA firm or an outside. This is the information we're going to be processing into Excel and calculating the payroll. This is actually the QuickBooks desktop version. It would look very similar to the QuickBooks Online version. And we're doing the calculations for payroll here. Starting with Adam, this is the information we'll put into Excel. We're going to say that Adam has a salary of $4,583.33. So that's going to be a salary. It's going to be the same each month. That's why it's a salary and not an hourly wage. Then we have to calculate the withholdings. Now we're just going to have a very simplified withholdings, just thinking about the withholdings for the Fed, US Fed, meaning the federal income tax, the Social Security, and Medicare. Obviously, by location, those withholdings will differ. But the concepts of the withholding and the journal entry that would be involved in it, and the idea of taking the money out of the paycheck and then paying it at a later time, is applicable to any type of withholding, whether it be to the federal government, the state government, or some other type of withholdings for benefits like 401k plans. So those will all differ, but the concept of taking the money out of the check will be similar. So when calculating these items, we'll have to figure out what region we are in and what those calculations will be, and then set up the QuickBooks settings as well as our own settings and work with our third-party soft companies if we're to set up the payroll here. So in this case, we have the federal withholdings. That's going to be the FIT, federal income tax. That's what our employees pay for their taxes that we are required to withhold as the employer. So, and that's going to be $720. We won't get into the calculation here. You'd have to do some calculations that comes from the W-4 is going to give us some of the information we need, including marital status, the amount of the wages, and then the payroll frequency, meaning do we pay monthly, do we pay bi-weekly, semi-monthly, and so on, or weekly. And then we have the Social Security and Medicare. These are going to be more straightforward calculations. Again, we're not going to focus too much on those calculations, but if you just have a flat rate, as these typically are, flat tax, more of a flat tax, then they're a lot easier to calculate because we don't have the progressive rates. So we'll take a look at those. Those are what are going to be taken out of the paycheck. That gives us our net check of $3,539.33. Then we have the employer portion, and that's going to be over here. We need to match then the Social Security and Medicare. This is what's coming out of our paycheck, or not the paycheck. It's coming out of the company's funds for the wages that are earned by the employee. This is a little strange. You can think of it kind of like a 401k plan that we're matching on. That's similar to the way the calculation will work. Let's take a look at this within Excel. We'll put the same information into Excel. We'll take a look at the journal entry and then consider how we would put this into QuickBooks and why. Typically, if you were to have a third-party software like ADP or Paychex process the payroll, you would have something like a payroll register, which we will be using here, listing the employees and then listing the information related to the employees, meaning their wages, their Social Security, and Medicare that was withheld on them. That then can be used to create the journal entry or enter that data into QuickBooks. So we're just going to put the same information here. We're going to say that Adam had $4,583.33. Social Security is usually going to be a flat rate. The flat rate for Social Security is around 6.2%, but we're not going to get into the actual calculations here, even though it is a flat rate, because it will change from place to place, although the federal taxes will be the same for the U.S., the whole U.S., and the state taxes will change. But the idea is what we're looking at here. So we're just going to use the number 258. Medicare's the same way. It's 1.45% typically, but the idea is more of a flat tax. It's just going to be a flat tax, meaning you would take the earnings times whatever rate we have, and that's what we would get for the Medicare. Withholdings for our purposes is going to be $66. And then the income tax you would think would be the most common tax and the easiest to calculate possibly or understand, but of course the income tax is going to be one of the most complicated because of the progressive tax rates, the multiple tiers used to calculate that tax rate. And the way we would do that, we would need to know the marital status, which would be on the W-4, the number of exemptions, the amount of earnings, of course, and the time period on which we pay, whether that be monthly or semi-monthly or weekly, and so on and so forth. So we're going to say that the income tax, we're going to say is $720. We'd also have to take that information, of course, and look at a table in order to then get this number of the withholdings. Then we have the total earnings. We're going to subtract out the Social Security, Medicare, and income tax to get the amount of check that will actually be received by, in this case, Adam Hamilton. To do that, we would say we have the 4583.33, total amount earned, minus Social Security of 258, minus Medicare of 66, minus the income tax of 720, gives us the 3,539.33. We'll do this with a formula here. This isn't an Excel class, but we'll do a quick little formula. Equals this cell, that's the total earnings, minus the 258, minus the 66, minus the 720. That gives us that 3,539.33. So that's what's going to happen on the employee side. This is what they're going to get. That's what they earned. This is what we took from them, from their check that they earned, in order to pay their responsibilities, their taxes, including their federal taxes, Social Security, Medicare, and income taxes. Now there's the employer side, what we have to pay for their earnings, our employee earnings, what we, the employer, have to pay. And we are, in essence, just matching the Social Security and Medicare. So it's a kind of doubling up on Social Security, just same number for Social Security and Medicare. So that's going to be a simplified kind of calculation. We're going to have to take that information then and use it to process a paycheck and to enter that information into our system in QuickBooks. Now we'll do the same information for Erica. So this is going to be QuickBooks on ground. This is a similar setup that would look like if we were to enter this information into QuickBooks Online as well. It's going to be the payroll data for an hourly employee. So we have the $20 an hour. The hours are 40 hours. That gives us the $800 that was earned by Erica. We once again are going to take out federal withholdings and then the Social Security and Medicare, the federal taxes that will be withheld, and we'll put that into our worksheet. This is the information we'll put into our Excel worksheet. Then we're going to have our matching of Social Security and Medicare into our worksheet in Excel. Then we'll enter this data once again into QuickBooks Online. So within our payroll register, we're once again going to say that we earned, or Erica earned this time, $800. That's her total wages that were earned. Social Security would be a flat tax, the 800 times some type of flat rate. These calculations, by the way, is what the system would calculate for us if we were to purchase the calculation of the system within QuickBooks, depending on the type of system that we are going to set up. QuickBooks typically is going to be pretty good at being able to calculate the Social Security, Medicare, because it's standardized through the whole country. When we get into more things that are going to be specialized to certain areas, state taxes are a little bit more difficult because they're not something that the system, QuickBooks, can just put in for the whole country. So as we get more specialized needs for different regions or multiple regions, it's going to get more complex. But the concepts will be the same. Social Security, flat tax, we're going to take this times some rate, usually 0.062 or 6.2%. We're just going to use 49 here. Medicare would be this item times some rate. I believe it's 1.45, but we're just going to use a flat amount of 11 here. Income tax, that's going to be the more complicated, although the most common one, which we take this and we have to look at some table, including the information that needs to be known related to marital status, payment, how often we pay, and the number of exemptions. So that's going to be 110. So we're just going to be using this numbers. We're not going to get into too much detail, obviously, how to pick those numbers up and how to calculate them. So, and if you buy the system, of course, the system will do less of that. It will less of actually telling you how it's being calculated. So we're getting a little bit of understanding of how these things are calculated by putting this stuff into the payroll register. So then, of course, we would have the net pay, which would be 800 gross pay, minus the 49 taken out for Social Security, minus the 11 taken out for Medicare, minus the 110 taken out for federal income tax, means that she Erica, is going to get $630 of the 800 she earned. So this, once again, we'll do that with a formula. You don't have to do the formula here. It's not an Excel class, but we'll take this 800 minus the 49 minus the 11 minus the 110. That gives us the 630. Then once again, we're going to have to match the Social Security and Medicare. So this is the Social Security, which is the same number, and the Medicare. Now it'll be more clear once we do the journal entry. We'll take a look at a journal entry, and then we'll think about how to put this into the system. This would be the information if we were to process this by an outside CPA or an outside company like Paychex or ADP. They may process this information, which we then need to put into our system in some way. Note the requirements for payroll typically are we need to give them a check, of course, to our employees, to Erica and Adam. And the check's going to be for the net pay, which is going to be this amount. This is what they're actually going to get in terms of the net pay. But we're also required to give them a pay stub telling them, here's your total earnings, here's what we took from you, and we typically need to put the total earnings and what was taken from them for the year-to-date information. This doesn't seem too complex with 2 employees, although it might. It's fairly complex. But if we have a lot of employees, that becomes very complex. And the more types of withholdings we have, it becomes very complex just because of the amount of data that we have. So when we enter this into the system, we could think of it as one lump sum. I could say, let's put this into the system in terms of just one journal entry, and then we will look at the detail of that journal entry by looking at the payroll register. Or we can enter that information as 2 journal entries, basically, or 2 transactions. And by doing that, it has the benefit of us having that in our system, more detail in our system. And we'll also have the net check, basically, if we're putting the checks in there that we can then check off in the system. So that's what we're going to do here. I'm going to try to put this information using a journal entry. We're going to use debits and credits here. If you don't understand debits and credits, that's okay. Just give us an idea of what's going on, and then we'll enter this same information into QuickBooks. So if we were to make a journal entry from this, I'm going to start with just Adam and Erica, enter them separately, and then we'll look at the totals. So with Adam, we're going to say that the payroll that was earned was $4,583, but the check that was received, what happened to our check going down, was only the $3,539. So what actually happens to our bank account? It's going to go down by this $3,539. I'm going to represent that with a credit. So this is a credit, not really a negative number here, although it's negative in Excel. It's just a credit for our purposes. And then we're going to debit the expense, meaning we're going to have a deduction or an expense reducing net income of the full amount, this amount, the amount that was earned by Adam. So that's going to be a debit of this amount. Again, we don't need to know the debits and credits too much, but that's going to be the debit. There's a difference then of these two. And the point is the difference, of course, is going to be these amounts, which is the payroll taxes we owe. We could put those into three different accounts, Social Security, Medicare, and income tax expense, or lump them all together into one account for payroll liabilities. They are liability accounts, meaning we owe money in the future. We're going to have to write a check to the government for the sum of these three amounts. Now, the sum of those three amounts, of course, will be the 258 plus the 66 plus the 720, 1,044, which is the difference between this 4583.33 minus the 3539.33. That's what we need here. That's the credit we need. So we're going to put that here. I can do it this way. Negative sum. Not there. We'll put that down here. Negative sum of these three numbers. And that means that now the credits equal the debits. So that's going to be our journal entry. We're going to say that we have an expense, lowering net income of that. But the checking account only went down by that, and the difference here is going to go to payroll liability. We'll do the same thing for Erica. We're going to say that Erica got 800 is how much was earned, but she's only going to get, in terms of a check, the 630. The difference between what she earned and the 630 will be a liability, which is going to increase the liabilities of, and that'll be the 49 plus the 11 plus the 110, or the 170, which is the difference between 800 and 630, 170. That's what our credit will be here, 170. So this would be the two journal entries we could use. Now we could put this all into place with one journal entry and just add those two up. So if we add up the debits and credits, then we could just enter this information as one large journal entry for these two employees. So we could put these two journal entries in essence, for the two to give us more detail, or we can enter the sum or the total in right here. If we summed up, as we typically would, the totals here in our payroll register, we can see that same information. I'm going to equals sum what was earned by Adam and Erica, tab. Then equals sum what was earned by, or what was taken from Adam and Erica for Social Security, equals the sum what was taken from Adam and Erica for Medicare, equals the sum of what was taken from Adam and Erica for income tax, equals the sum of the net check that our checking account's going to go down by, equals the sum of our portion of Social Security and Medicare for Adam and Erica, equals the sum of our portion of Medicare for Adam and Erica. So this is our information, so this matches out here. The sum of this total is going to be here, and then the net checks, which are multiple checks that went out for processing total payroll, is going to be here. So then we have to record our side. And this is what's really confusing about payroll, is that we've got the employee side, and then we have our side, what we took out for our portion of the payroll liability. And that's going to be our matching. So these are these two items over here. They have nothing to do with the payroll check. They're not going to be on the payroll stub. They're going to be separate over here, a separate transaction, a separate journal. Now the debit would typically go to payroll taxes, but QuickBooks generally lumps them together in payroll expenses. So payroll expenses for QuickBooks includes both the earnings as well as the taxes that will be withheld that we have to pay on the earnings for the employees. So the payroll expenses For Erica or Hamilton, let's start with Adam, are going to be the sum of these two items. So we're just going to say this equals the sum of these two items. Enter. Now note we're not paying them yet, so cash is not going down. The credit's going to go into payroll liability. So it looks similar. It looks like these two should be matching up here, but it's different. These two things are different because this is what we are paying on the employee's wages as opposed to what we're taking from the employee out of their paycheck that they owe. We're going to do the same thing for the Erica. So we're going to equals the sum of these two items. And we'll have the debit and the credit. And then if we total these up then, we've got the totals. So this is the information we'd have to input. We'd have to take this information and now put it into QuickBooks in some way. We could, once again, just put this information into QuickBooks using the journal entry, totaling everything up, or we could enter the detail. If we have just a couple employees, it may be beneficial to enter the detail so that we can see the breakout of the detail all in the same system without having to jump over to the CPA's payroll register or ADP or the outside firm's register to see that detail. And if we're going to use this to basically enter the checks into our system, it'll give us those checks that we can then check off as we are going through the bank reconciliation rather than having to group them together in one lump sum check when we're matching out from the bank statement to our books. So because we only have two employees here, that's what we're going to do. We're going to put it in the detail. We're going to put in the checks for Adam and Hamilton. If you have a lot of employees, it might not be worth your time. It might be better to put some kind of lump sum journal entry in place, like just this type of journal entry, and use the register from the third party as the backup or detail of that information. Back in QuickBooks, we're going to enter this information into QuickBooks now, and we're going to do this with a check. So we're going to select this little icon up top, and we're going to go to Vendors and Check. Now we're going to process the check here, but note that we're not going to have a payroll check. We're not going to be able to print the payroll stubs here. We'd have to do that in some other fashion. The third-party software would be helping us out with that. What we're going to do here is put the information into the system so that we have it within the system. So we're going to process the check, and we're going to say the check is going to go first to Adam. And so there's Adam, checking account, mail address, we're going to keep the same. The date we're going to have as of the end of the month, 01/31/21 is the time period we are working in. We're not going to print this, so I'm going to say this isn't going to be actually printed because we're just entering the check into the system and processing it in some other format outside of the system. The check numbers, however, should match up. Then we're going to enter these accounts. Now we're going to enter the same kind of information we did with the debits and credits, but we'll do it with a plus and minus format. No matter how we do it, it's a little complex because we have multiple accounts that we have to deal with within the check as we enter this information. We know that by the fact that this is a check, it will be decreasing the checking account. The other side of this transaction is going to be payroll expense. Payroll expense. Now, if we had payroll set up, it would generate the payroll expense for us, but we don't have it set up, so we're going to add the account, add the payroll account. We're going to say that the detail type is going to be a payroll expense account, so it's an expense, and then a payroll expense account, and we'll keep the name payroll expense, no description, no subcategory, and save and close. So there's our item. Description, we might want to put the pay date and whatnot on there. I'm not going to put any description, however, here. We're going to put the amount then, which from our payroll register was 4583.33. We're not going to say it's billable. That's going to be billable as if we're going to put it on a customer invoice. We are going to add another account though, because we didn't actually pay the 45833. We only paid 3539.33 because we withheld payroll liabilities. We withheld the payroll taxes owed. So we're going to put that into a payroll liability account. So we're going to set that up. I'm going to set up the payroll liability. It's not an expense. It's going to be some type of liability account. So if we go through these account types, it's going to be an other current liability. That looks good. If we go through these account types, we're saying loan payable, other current liability, payroll clearing account. We're going to go with payroll taxes payable account. So payroll taxes payable. That name is here too. We have the description none, and no sub account, and save and close. So we'll have the payroll liability, and I spelled it wrong, so I'll go in and adjust the spelling at a later time here, but we're going to have this information, and we're going to say that here we need to reduce this. So this is kind of tricky because we have to put a negative amount here to do this if we're going to do this within this system, 1044. That should bring this amount down as we go through here once we tab through to the next information to that 3,539.33. This is the amount of the paycheck. This is what would actually be shown on the paycheck. Now we could try to enter the other side of it, the employer side, in this information as well, or go to the journal entry to enter it, which would be more typical to enter a journal entry. But let's go ahead and try to finish this whole thing out just right here so it's all on one type of transaction, and that's the employer side. There's no cash that we're really involved, but we can use this same screen to basically enter the journal entry, which would be the fact that we had the payroll expense is going to go up again. Payroll expense. And that's going to go up by the employer portion, which was in the case of Adam 324. And then we had the other side of that, which is going to be the payroll liability. Payroll liability that I misspelled here. So then there's going to be the other side, and that's going to be a negative 324. So if we select those two items, note that it doesn't change the total, which is 3,539.33, which is what we had when we just entered these items. But it does enter the other information and set up this liability that we'll have to pay at a later time. So in essence, what we did, remember here, we just entered Adam's information. We said that we had the expense here, then we took out the Social Security, Medicare, and income tax to give us this number, and then we said that we're also going to increase the expense and the related liability for our portion. So note that just this check, even if we do the payroll through an outside service, is still a little tricky to put this into our system here. So we're going to say save and new, and we'll do this one more time for our second employee, Erica. Save and new. And we'll go through this information again. So now we're going to say Erica Robinson. That's going to be our employee. The checking account and the date's correct. That's correct. We're just tabbing through this whole thing. Then we're going to say that the other account, once again, is going to be payroll expense, and we're going to say the expense for Erica is 800, and then we'll have another account here that's going to be the payroll liability, and that's going to be for the negative 170. And if we scroll up, that should give us our correct check amount, 630. That's what she actually received. Now we're going to try to enter the employer portion into the same section, which is the fact that we have another payroll expense, and that's going to be for 60. And then we have the other side, which is going to be payroll liability. And that's going to be for a negative 60. And that should have no impact on the total amount here, which is still 630, but will record in essence a journal entry increasing the expense and the liability for our portion of the payroll. So let's save and new this, and then let's go to our reports and let's see if this does what we hope it should do. So we're going to go to reports here and scroll down, and we go to reports, and we're going to take a look first at the balance sheet. And we'll change our dates up top from 01/01/21 to 01/31/21 and January 1st, 2021 to January 31st, 2021, and run that report. So we know that the checking account should be going down by the two checks we wrote. So if we select that item and we scroll down, there's Adam and Erica, and there's how much the net check was for. So these should match up then to the net check and to the amount actually decreased in our checking account, the amount that we can then tie out to when we reconcile the bank account. If we select those items, then we see our check and we can see some of the detail here. Again, this check is not sufficient for a pay stub typically to give to the employee, because we typically need more information in terms of the detail of the withholding types. But this is the information we can enter into our system as we process the payroll. So we're going to close that out, and then let's go back. So we're going to go back. We also have the payroll liability that should be down here in the liabilities section. So here's payroll liability. If we select this item here, we are going to see our liabilities, and that's going to be 2 for each. We have Adam and then 2 for Erica. And that's going to be our liability created from the employee liability and the one that we created for our portion of the employee taxes. If we select one of those for Adam, we get back to our check. Here's the information. If we scroll back down, of course, the other one that's also for Adam, if we select the other one that's Adam's, and we scroll down, we see this information there. So there's the 2 that are going to the payroll liability. If we close that back out, and we go back to the reports on the left-hand side, and we go into the profit and loss, the income statement type report within QuickBooks. Change the dates to 01/01/21 to 01/31/21, and January 1st, 2021 to January 31st, 2021. Run that report. Going down to the payroll expense item, and we select that item. Then we see Adam, Erica, and Erica. We have 2 for each. One's going to be the payroll expense that was earned by the employee. The other's the payroll taxes that we are paying on the employee. Note that this number here is the full amount earned, not net of the taxes. And this number here is going to be our payroll taxes. So if we select this item, 4583, that's the full amount that was earned. And this amount that's going into the payroll expense is really our payroll taxes that we put in. So if we close that back out, those are going to be our 2 items there. So if we scroll back to the profit and loss, then of course this is being increased, the payroll expense is being increased by the full amount, not the net amount paid to the employees, plus our portion of the payroll taxes. That increase to the expense, bringing down net income, giving us a loss at this point in time.